Good evening. This is Fadi Hamzi. It's 5:04 p.m. on Wednesday, February 23rd, 2022. This is our weekly series. As you know, we've got them on GoToWebinar, and it builds the list and goes on and on. We're approaching our capacity there slowly, but I think the capacity has to do with number of attendees, it's number of signups. But the beauty of the sign-up situation is that you can just let it stay there. It reminds you, if you like to attend, you don't need to sign up again. We have two series going on. One is the market timing on Wednesdays. The other one is floating once a month for our ORB package, mainly as a kind of an open house, give you a day to be in there. Now, tomorrow night is the special. Because we just introduced ORB version 4.3, which is done really, really nicely. Last 2 days it's traded. It doesn't trade on Wednesdays. And like the first 2 days of last week, it was me. I'm a schmuck. I didn't arm it. You have to arm it before it goes. It's like a launch of a flight, F-14 off a carrier. We did not arm it properly. That was one mistake. The other day, I had the wrong symbol in. I put a backtest symbol in instead of live symbol. And the live symbol was the only thing that Chicago Mercantile Exchange at their Aurora facility have the Globex matching engine executed. So the trades were going, it said reject. My bad. It's just tired. So anyhow, believe me, on weekends I have to end up working a little bit too. And then a little bit of time with Admiral. This 9-pound dog has got me by his little finger. But long story short, we're making progress. For tomorrow night, I need to have some back tests done. I'm hoping to do that after tonight. If worst case, probably midday tomorrow, I'll finish it. So anyhow, today we separate the two packages. We sign up for two different packages with GoToMeeting. Beauty of it is that we preserved all of our emails, all of our calendar, so we didn't lose anything. But it's been a sore point with GoToWebinar. They changed their plan, and I was supposed to be grandfathered in. We were there from 2007. Long story short, we resolved that as well. We will solve each problem one at a time. It's just a matter of getting the time to get there. That's housekeeping. And we're also offering some free time for 4.3. Basically, if you haven't been with us recently on a test drive, you qualify for it. If you're interested, send us an email, admin@Hamzi Analytics, or you can click up here. Right up here, the same email. You can send it to us. We'll get you in there. Remember, it's trading in queues. It's using two rooms. One GoToMeeting, one Zoom, and two different technologies. One, that's the trading system. The other one is our coveted over the other time frame, which is from market profile. Is for when the whales come in, and it's looking at the block trades only. Remember, the mom and pops don't move the market. It's the big guns. And that software was done like 4 or 5 years ago. It has not failed us. We're still running, and people have come back or asking for that, saying, you still offer that? I said, yeah, we do. And we run, and now all three rooms are 24/6. So at the margin, we have improved, and we added value. And we're very, very happy with it. We're in the middle of a couple of joint venture with people who want to be involved with us, either as an affiliate or as a signaling service, where they just trade the money for you. Yeah. All of it. So, a little bit busy there. So anyhow, more when we get to webinar tomorrow. By the way, we post these on our Twitter account. You can follow us over there. Okay, right here from this link. These webinars are recorded for your protection and mine, because I'm considered a newsletter writer. I can't give one-on-one advice. If you send me a question, politely I will send it back to you, and the question will come through on these meetings. And then I'll read the question without mentioning your name. I will answer it. It is recorded and ends up here on our YouTube channel. We're about 1,300 people there. Oh, we're not 1,300 10, I guess, whatever that is, over there, and we post them there. Okay, you have a full history and very transparent. Good, bad, and ugly, it's there. Boom. No editing, no time for that. And we're not a marketing company. Our record speaks for itself, and we're all going to make, just like everybody else, we make some mistakes here and there. But over time, I think we've done okay. Now, one of the things, the trade we were in, I'm going to get into that. But before we get into the market timing, let me just go over calendar, and then we'll jump to the market timing charts. I'm following our script. We're not doing anything different. It's always very boring. I learned that a long time ago in Chicago. Make it a routine, then you know something is up. Otherwise, you thinking something is up. Yeah. Stay with your routine. If something is different, you gotta notice quickly because it's out of your routine. No different than running a dog. I mean, that's what I handle Tico. Keep his routine. You know, I do the same with my life. So, but sometimes he's got a better life than I do. Anyhow, we're in the fourth week of the month. So we're going to have durable goods. We're going to have GDP. Last week had expiration. Consumer confidence came in. Pretty good. Maybe too good. We'll see. Let me go to the numbers. By myself. That. We came in line. I'm sorry. We came in line. We were a little bit higher up. When it gets too good, we've gone too far. And that's what 113 and prior to that was. Let's see. There was another one that was important. Oh, Richmond Fed. Oh, yeah. The inflation there, Richmond area was too high. As a matter of fact, it doesn't show in this report. Peter Cook, one of our moderators, is extremely well read and extremely maybe spread too thin, but extremely attentive to a lot of details he was bringing up in the chat. We have a very eclectic chapter, by the way. I mean, he and a few others are just doing a killing over there. I really appreciate that. Daly spoke today, and actually she was a little bit on the softer side. I saw the notes posted later in the day. She's the head of FRB in San Francisco, and big, hitting the drum, saying inflation, we're going after it. The Fed is showing their hand slowly. They don't want any surprises. As you know, in 2 weeks, I believe it's the 15th and 16th is the next Fed meeting, and but we have a bunch of trades that are due on the 18th. One of them is a 200-to-1 leverage. It's done okay. Today did a little bit better, but frankly, it started faster, and then things eased up, and it backed off. It's a put spread. I'm going to get into that in a second. Let's go through the calendar here. I think what we want to watch tomorrow is GDP. That's crucial. Jobless claims, as always, and home sales. Those two are crucial for me. GDP, home sales, jobless claims every Thursday. Then durable goods. Absolutely crucial. Okay, and that ends this month. Let's see. We should have. I don't know what's going to happen on Monday. So GDP. Am I missing durable goods? Hold on. I have a checklist here. New home sales. Oh, okay. I think LER was last week. Right? And so was housing starts. Okay. So then the following week we're gonna have non-farm. On the 4th is non-farm, and then ADP on the 2nd. The week after that is rollover. We're gonna be rollover into new contract. The week after that is the expiration and FOMC. So a lot of mine. We're walking through a lot of minefield. There's no question about it. Okay, why don't we get to the charts here? Timing chart, our first one. Absolutely beautiful if you're short. And we started shorting about here, as you know. We did not do. We had I believe we were long in here. We pulled back, and then I was trying to get short. I missed the top, pulled back, and then I went short. But I did not put a trade on. Some of you wrote to me saying, "Where's the trade? Where's the trade?" Well, the 200 bar was there. It's a time for pause. And you could see how it be. Remember, this is what we're saying. Okay, each day comes in. There's a time for pause. And so I was trying to get some clarity. Once we pulled back here, I jumped on the short side, and it's been absolutely awesome. Both on PMT for you guys. Actually, yesterday morning, I believe, was it that it hit our target? Yes, because Monday was closed, yes. We hit our target early in the morning. And now, today, for the option trade, 1168, which was a put spread on SPX, that's ongoing. It's in the money, but doing a little bit better. It wasn't like it was at the beginning. Here, it jumped really nicely. But then we eased off, and that eased off ate some theta. It's out of the money, and it has to do with this area right up here. Weekly. Why down there? I don't need it to go down there. I just had that spread was cheap. Okay? The spread was cheap. It was a 200-point spread. So technically, we paid $1 for it. So it's 199 to 1. So it's a lot. So let's say you put 5,000 on it. There's a potential chance to go to $1 million. What is the chance I would put on it? 2, 3, 4%. No more than that. That's what it said. A lot of trade. But can we get out earlier? Oh, absolutely. It gets to 10, 15x, I'm out. 20x, I'm very happy. The longest trade I've ever been in options was 30x. So $300 became $9,000 instantly, but that was real instant. That was earnings for Google. This is different. This is it's a lot of inputs, a lot of variables. I call this the three comrades trade. Remember three amigos or three tenors? We got three comrades. Comrade Putin, Comrade Trump, Comrade Powell. Let me explain. We know about Putin, what he's up to. And potentially that's a very, very dangerous situation. Number two, Trump is having legal issues, and he's been saying that he forgets that he's not going to prosecute him here. Hopefully he's got better attorneys. But yeah, he misses that he doesn't have the immunity he had when he was at the Oval. So it's just a simple citizen, same rules apply. But he said they're being nasty to me, so I want you guys to go, and there are a lot of nut jobs there. He said in Arizona, one of the centers of nut jobs from that ilk, is that to go and demonstrate in each city like they did in Canada. That could stifle the economy here fast. Okay, and that problem is not going to get resolved. He's going to be in court for a long time. So that's all. Number three, Comrade Powell is, he printed a lot of free money. Now the inflation has come and he's got to tighten up. So we got that's another rule. Now, my strategy, my thinking was, if he plays it smart, he would raise the rate by 1 full point, but in 2 stages. One, immediately with a telephonic or video conference meeting among, well, that now is video conference anybody goes to Washington for these interviews, for these votes, but they do it telephonically, inter meeting. So, between meetings, not in the meeting. So do that now, and then do 50% on March 15, 16. And here's the reason. Historically, the Fed is behind the curve. As more data comes in, there'll be more pressure on it. There'll be more put him into a corner saying, you're behind the curve, you're behind the curve. Well, try to get a little bit ahead of it and do something. Bernard Nanke did that, except he was young and foolish. He did it right before Friday expiration. He did actually half an hour before Friday expiration. Don't forget, it was, I think, September or August of 2007. And I was in LA. I just grabbed my coffee, come to my desk about 6 a.m., 9 o'clock Eastern. And, the settlement, the European settlement is at 9:30, 6:30 local to LA. And obviously the American style is in the afternoon. But as I'm sitting down, S&P's go up 50 handles, 5-0, 1 bar. I'm thinking data is bad. So I called train station, and the guy's laughing at me. He says, "Don't you get the hands?" I said, "What's wrong?" He goes, the Fed just dropped the rates. And this thing about it. Well, the board that day in Chicago was that some people just didn't show up. So market makers, they were instantly bankrupt. When you go into the expiration and you're hoping you're delta neutral, but the Fed comes and moves it by 50 basis points, and we're moving 55, 60. I don't know how we ended up, but the first bar was 50 SFPs. The equivalent on NASDAQ would be like 100, a little bit under 100, like say 95 handles in a Q move. You're done. You're basically done. And all these guys were not at their desk, and options were still closed. So the option guys couldn't do anything. Those who were just getting their coffee and ready, maybe they had something on the future side. Those who didn't get to, and they were coming in at 8:30, local 9:30 Chicago, to deal with the exposure. I mean, I'm sorry, the rollover of the expiration. They didn't need to. They were done. Hopefully, they're not going to do it like that. Maybe do it in the evening or over the weekend or whatever. But that's what I would deal with. But, what the hell do I know? I'm just another poor dumb immigrant who's going to listen to me. So, for now, we have this drip of the three comrades trades. We went to -2 sigma. My cloth later was -170. That's just the beginning of big oversold. Bread trust below 40. Also, it's not what happened to us in January. This is almost a year after GameStop. Remember? Yeah, anniversary of GameStop. And and then my biggest fear was this. I've been saying in the chat room, when you get a CI rotating across, that's a rotation, is bad news. It's really bad when it's below zero. It comes into zero and rotates. So this rally here was absolutely fake. It was just to bring the sheep in because sheep has to be slaughtered. And that's what they did. Remember, the fact that we didn't go 50 bar, I mentioned that. If you listen to the last webinar, I said, we're not going under 50 bar. We can't cross it. I'm comfortable to go short now. And now today we added to that. We had one more layer, a separate trade for the option room again, for not for PMT yet, for April expiry. Here's the reason. Again, news says that Putin wants to have a referendum in those two oblasts, which means the basic provinces. So legitimize his move and basically saying there's genocide, people are being harassed. These are Russian speaking. Some have Russian passports. Nobody can do it before you're going to move and take over the balance of those two provinces, which would be somewhere close to 20% of the landmass of Ukraine. These are estimates. But the point is, you cannot just walk into a new country and set up an election. If he wants to go that route before he does anything bigger, I think I need more time. So I felt our March trade was a little bit too short. Well, we add to it. We came to roll it out. We found out the rolling was too expensive. Now that everybody figured it out. Remember, we're in for $1. Now it's trading 2 to 3. One day hit 365. So we went to look at the April, and then May. April was 5. Are you sitting now? May was 9.5. I can't put those trades on. Not for a service. Not for an option service. Just too expensive. So I went to one of my option mentors, Admiral Esposito, and he suggested it. I've never done it before. He did it. He showed it to me. Broken wing butterfly. And don't ask me what that is. I have to ask it myself. I said, what the hell is this? I've done a few butterflies. Usually don't work, but it's an inexpensive way to get in, and you have a little bit of a play there. So we put that on for April. We paid 3 and change. It's trading at 4.4 right now at the close. Why? Because it was at 1-ish, 2-ish. Now maybe 2. Yeah, before 2, a little bit before 2, but we really start moving down today. Part of it is also there were no bids in the market. If you look at the dome carefully, as an intraday trader, I gotta watch the dome. There was no bids for a while in the late afternoon, and of course we were going to key area of the second Sigma channel, and our target was 42222. Look where it went. A friend of mine reminded me on a text saying, "Remember 42222?" I said, "I know, that was your number, not mine." He goes, "We're going to be there or lower." I'm close, very, very close to that. Time-wise, if the Blinken is right, Secretary of State, they're estimating that Putin will move on within 48 hours. I don't think Putin's that dumb. I think he's probably going to do it right near the close or after the close, our time, on Friday. So we would not be able to take action. And most likely Sunday night we'll have a gap down. If I look at the VIX carefully, we're not at the 4 sigma yet. That would be near the bottom. But as we move up, that's going to move up. That's not going to sit stationary. So here are my targets, theoretically. Sometimes tomorrow or into Friday to trade in between these two levels, 32.5 to about 35.5. Between now and Friday, and then we get a spike. If he moves in on Friday night, then we should see and I remember this, the VIX trade, I don't know if it trades on Sunday night or not. I know it trades early Monday morning, very early. But we should be able to see VIX trade in this area. That line is going to be a little bit higher. Potentially it could be 40. For this to settle, my estimate is 40 to 50. And then the panic will start. I mean, once you get past 40, you're going to see the panic. There's no panic right now. If you look at today's tape, it was very, very orderly. That's not the bottom. I need to see capitulation, which by definition means throwing baby with a bathwater on the 10th floor. I haven't seen that. Why do I prefer that? I'm not being cruel. I just want to get it over with. I want to flush it away. Because if we do bleed like this, that's going to explode, slow bleed. We don't know what the end is going to be. Long term, that's even worse. Okay. And there's a whole scenario, time cycle was that says the low should come by March equinox, which is 21st of March, 20th, 21st. That's 2 days after expiration and 4 days after the Fed. Okay, and by then we're going to have another CPI, PPI in there. We're going to have another non-farm. So the deck is full. If you're long, I would go through all my Bauer stocks, which is, again, management, products, and balance sheet. If they're not very strong, like some of the names in, let's say, Russell 2000, they have no business to be in your portfolio. Hi, Bruce, how are you? Hit the eject button. Ask questions later. Again, not a problem here. CI is turning below zero line. This is ominous. This is not good. I have more respect for this. This is a problem waiting to happen. Let's go to Canaries. What is this? Hold on. What is that? I'm sorry, this new stuff from Microsoft. This is 11. Microsoft 11, Windows 11. Anyhow, that was doing pretty miserably too. Earlier, it was closer to 0 seg. Again, you need to wait for settlement data to be clean. 480, 464 down. Look at utilities. That I don't understand, but so I think what did the bonds do? Quickly, they were a little bit lower. Yeah, a little bit. Actually, yields went up. That's fine. Okay, I get it. Okay, so again, look at how bad this is. Look at this one. Remember, these CIs, by the way, are for the lower two. I don't care about those top. I just want to know what the values are. But really, what I'm interested in transportation. And Russell, as you know, I make that thesis or hypothesis that what happens to SPX has a lot to do with what happens to transportation. There's a lead time. Same thing with Russell for NDX. So going to our D trenders, we could be near a bottom. I think it's got the makings of it. I know better when we're not at the bottom from other indicators, but this indicator says we're close. Why? All 8 of them are negative. The 50 and 200 of these three crucial indices are all negative. So that tells me we're near. At least we're getting set up for a low. Where that low is, time will tell. Volume is crucial. And we should have a big bar with a big negative bar with a big volume. Just haven't seen that yet. So stay tuned. Of course, the accompanying VIX has to go up. There's a lot of things we're going to go through. You're going to see what I'm talking about. So again, back to VIX and the VXN. I moved to the part so we can post these. As you know, on our Twitter, I post things 2 or 3 times a day. Just as a give back. I don't have time. No obligation, no quota. I don't operate like that. I'm more event driven. If I have to work harder, I work harder. But when things are calm, they're calm. The last few weeks, I've been posting more stuff, and it's been a huge number of signups. Just for the following us in the Twitter and coming to this webinar. To me, it's a give back to the society. I've been extremely lucky. So you got to help out others. As my mom would say, Farry, don't forget, you can't take your brain with you either. So if I impart with you some knowledge before I leave this universe for the next one, I feel gratified. So anyhow, in this situation, you'd see the XN is too low. Why? Sigma levels. I don't look at the values. I was a student of Robert Whaley. Dr. Whaley invented the old VIX and VXN, which was, they call it now VXO4 or VX, and then VXN. As a matter of fact, we collaborate on VXN. It's not the value per se, it's the shape. And the best way I know to figure out the shape would be able to do it as a uniform function that across different assets behave the same way as signal channels. Why? It measures itself against itself. Okay, so that's crucial. As you can see, we're nowhere close. And now, can we turn around and go north, south on the VIX and north on the assets? Absolutely. With Putin, you can if he turns around. Do you think so? I don't think so. He's had this issue since 91, right? Or I'm sorry, 89. Fall the wall. He was at Country Bay at Dresden, right? They almost burned down the building he was in. And he bluffed his way out. So he's got this grievance. It goes back for the Warsaw Pact nations that the Soviet Union lost to the Russian Federation during that transition. That's what. 2, do you think Fed is going to fold and go away? Not with the numbers we have now. And if the oil goes to 95, and we almost hit that. My estimate for oil is if there's actually full sanctions about Russia and locking up the technology, the oil transfer technology, because Russia is just a gas station. That's all it is. And their armaments don't work too well. That's the only export they have: arms and oil and gas. They have a lot of gas, and now they're one of the big producers on oil. They are part of OPEC de facto. But if they cannot drill, especially, remember, they're drilling north and north. Every time they go higher and higher, because they're already depleted the central part of Russia. Those becomes much, much tougher environment, very hazard, and then get to some areas you're going to hit the water. Arctic area, very difficult to drill. And they've been using our technology. Exxon and Chevron has had major work over there. If those are stopped, I fully expect 120 on the crude. Let's say June basis. Okay. Now, JP Morgan came out today and said 110. Okay, 110. You take it, whatever you want. You pick your price. Anywhere in that range is fine with me. 110, 120. Remember, I'm the one who had Labor Day 2014. Oil was like 103.4. I said I don't like the price here. I think it should be a lot lower. In one of my syndicated radio programs, PTI, the stocks are just to be exact. It's wrong to PTI. And they said, well, what are you thinking? I said, I'll let you know next week. I was there Thursday. Next week, we're at 96, and I said, we should see 30s. within a year. We were at 60 by Thanksgiving, 33 by Christmas Eve, 28 by MLK. So I'm not sure. I'm not saying I know oil very well, but I have a decent sense for it. I think we should see 110 to 120 on crude. If the crude goes there, why did I go there? Sometimes I speak a little bit too fast. My apologies. If it goes there, then you know what's going to happen to inflation. Then you know what's going to happen with Fed. If you think they're under pressure now politically to do something, wait until we go there. And you're going to be putting in Florida, we're probably putting $6 to $7 a gallon already. I think it hit 5 and something in California. So we could be up there. So, yeah. Dave, I'll get to your question. Let me finish my spiel first. Okay? Thank you. So I don't think those are going to go away. Of course, Trump, your comment, Trump is not going to have any relief from the legal issues. He's just beginning his legal problems. And because he's so combative, they're going to be dragged on in court. This issue of having protests could come into full life and dragged on. So I just think we have a lot of headwinds in front of us. Now, moving forward, look what's happening here. Wow, we went to 39. This is a 52-week low for all of 500 names of S&P versus the highs. This is normal to drop, but this was very low. Why? We were very high up, all-time highs. So you cannot get really much of a reading on the lows for 52 weeks when you're all-time highs. Makes sense. This is going to drop to 0 or near the stop there, but now this is coming to life. For us to see a low, we need a bigger spike here. We're not seeing it yet. But if I go back, you'll see. You need the spikes up to around 140 area and up. This is 250. But historically, around 140 and up, the lows are put in. The lows are right after it. As a matter of fact, these go crazy right before it. Not here yet. A long way to go. So, time cycle says March equinox. There's a school out there, technical types are saying the next leg would be in May. We'll have a bounce in April, and then would that be the E wave? The E wave will come. Yeah, this is basically when the C wave they think, and then the E wave will come. The big one would be in May. Well, I don't know. I'm not a what do you call it? Elliott wave guy, and I don't know if I can go that far. I am bullish on the country, but I want this flop to go up. I think we will see 5,500 on S&Ps. But now it looks like maybe it's not this year. Maybe very, very late this year or next year. But we got to first clean up. Why? There are 25 million new investors who have come in since March 2020. From where? PPP money. They didn't pay the payroll. They didn't pay the rents. They put it in real estate. They put it in Robinhood and Reddit. Do you think Morgan, Goldman, Stevie Cohen, Soros, Ray Diallo, they're going to sit down and these 25 million are going to keep their money? Of course not. They're going to bring them in, raise it a little bit, drop the boom. Raise it a little bit, drop the boom even further. They got to clean them up. And that's the process we're in. The system cleans itself. They smell free money. It's called liquidity. They're going to go after it. By hook or crook, they will. It always happens. It's the history of the market. Nothing different. Legally, they'll take that money away. So, question SRS. What is SRS? Just broke the 200 even of the first time. I have no idea what SRS is. Is that real estate? Are you seeing? Yes, I am looking at interest rates. I'm seeing it here in Naples. The highest move in rental as a county in the U.S. last year. And in some pockets, on the high end, it's been 15%, 20% on the high end, like a neighborhood I'm in, which is not super high end, but it's very nice. But by the beach, it's gone up about 15, 20%. In the medium market, 38%. Here's the question. Who's going to afford it? And the other problem on it, two things we have. Again, home buyers, first-time home buyers, is what moves the real estate higher. They have a lot of debt. Schools from Bow names like University of Phoenix, they have no value, those educations. Now, not because they're online, it's just that they're Bow names. But 660,000, 70,000, 100,000 debt. Now, with the Dodd-Frank era, what are you going to do with the back ratio? And you can't get rid of it. It's student loan. It's not dischargeable under bankruptcy. You see the conundrum we have? We don't have home buyer. First-time home buyers coming in when the rates are rising. When the rates keep rising, this is a 10-year. This is real estate. Keeps on rising. This is a 2-year high. Keeps on rising. You're eliminating those parts, so you're not going to have home buyers coming in, not as many. And you have a lot of production. You look at existing home sales were up, and new homes on premise were up. So maybe slightly off what the estimate was, but still up. So I think beginning to tilt. The existing home sales, that means people are just jumping in. They're trying to get the trade done, get the interest rate locked in. So I think you're going to see a soft market. I'd say with this, probably 2 years from now, I'll probably be looking for something to buy myself. This is the seller's market here. You don't want to do that. So I think real estate probably 2 years from now should be attractive. Right now, it's just very expensive. Good for a seller. Buyer, no. Unless it's a utility and you're young and you want to keep it for many, many years. And hopefully it'll come back up. My problem is it's just affordability in the age of Dodd-Frank. Again, peak America. We talked about it last quarter. Not now, last quarter. Everything that high up. You can't. Bonds, S&P, real estate, oil. You just can't. At some point, there's not enough money to go around. And so you're going to see, listen, we're doing $1.6 trillion in reports each night. Don't tell me there's liquidity. $1.6 trillion, yes. Just look up Financial Juice, they report that live. You'll see in the morning what the reports were. There's something wrong there, guys. I could see $1 billion or two, 900 million, whatever. Trillion? Something is off. Something is off somewhere. Yeah. It's every day. So there's some liquidity issues coming up. So watch that. Let's get back here on SPY and Momo. Okay, Momo -9. So are we getting close to a bounce? Yes. Can we go after 10? Absolutely. Have we been there, done? Sure. I mean, have we done that? Yes, of course. I mean, if you go back, okay, this was last year. I'm sorry, 2 years ago. You could see what we hit. I think it was -14, -16 area. That's a -16, yeah. That's probably lowest. Yeah. So we could hit down there, and it could be several false bottoms before it's done. Look, this was that's not even the bottom. The bottom came about here, which is divergence. We're still dropping on the SPY1, but Momo is pulling up. But look how fast this thing drops. And dropped very deep, and that was at the beginning of the drop. Are you with me? So it fooled a lot of people. I remember one day here I was wrong. You just that blood that rushes to your head. You go nuts. Remember, we shorted here. That was Admiral Tico, Daddy Salam. 2 words from CDC. Chemical reagents. So, long story. And down here, in one of these webinars, we talked March equinox. That day was March 23rd. Read about what I posted. Now it's coming out what Chairman Powell did then with very unconventional steps, but just blew up the budget, not the budget, the Fed balance sheet. Blew it up into the size. It's still holding it, but he's got to get rid of it slowly. So yeah, can we go lower? Yes, we can. Let me go here quickly. So this we're just beginning to. We could go there and sit there for a while. We'll see. I don't think Putin puts 190,000 people on the border and it's going to walk out tomorrow. Especially yet, he's not getting any bargains. Or what he's asking, he's hearing no. So what would you do if you were there? He's already getting his no, so as well, move in there. So we'll see. So that's my thing there. Now we're near 3 sigma. I understand that. Just we tested that today. This was 42.22. We're almost there, so we almost matched that. Is this going to be a W? We'll see. There was no huge volume today. The future sales were very, very orderly. What do I mean by that? You want to see S&P move 1 to 2 full points at a time. Full points. So it's trading 42, 26, 24, 23, 27. That's going to move. Not quarter up and down. That's orderly. That's a two-way market. No. You want to separate or disintegrate the two-way market where it's jumping, trying to find the customer, either on the buy side or sell side. We're not there yet. So the makings of a bottom, all I can say is I think we're close, but it could be a few days to a few weeks away. And it's not going to be easy. It's going to be very, very difficult each day. So I traded today maybe an hour tops, and I was exhausted. I just couldn't do it. And my fear was giving back. And a couple of times I did, and then I came back and I said, "Bang, your luck is going to run away. Just get out." And then I traded one trade at the end of the day, near the close, and that was borderline. I made some money, nothing fancy, but borderline of losing it. And that's tough. The worst thing you can do is not making the money, is giving it back. And that was the two or three close calls today. But again, that's NQ, that's a little bit more leverage, and it's dicey. Okay, so let's see. SQ, let's go to SQ. Now, I don't know if this is refreshed or not because this usually reports an hour late. Okay, now this says the boys are cashing some out. Is that today? Yeah. So we're below -1 sigma. It's at 126. Design limits are 110, 100, and 150. Obviously, we've never gone that low yet. 111.60 is all-time low. High is 150.75, so way above the limit. So I wonder if that designers were any good. Not the first time Sequoia has done this. Don't quote me. I still have a relationship with them. But that's what this SKU has done. Now, if you go to our website, there's a chart that posts that and shows you what that probability is, what does it mean, and there's also the PDF you need to read. I don't have it memorized, but I'll show it to you where to go. And I have the printout somewhere in here. You go to preview. You can go to PMT preview. By the way, I've not done the PMT I want to do. I keep on saying that. I'm just like sound like somebody else, for 4 years of having infrastructure week. And we're gonna have PMT week one of these days. I gotta get there. Right now we're too busy with the trading system. But I'll get to that. So we go to PMT Pro and go to issue before. I think it was 11. Let's see. The one with the charts? No. Let me go back one more. 4. Okay, there we go. Yeah. As you go through here, there we go. This is what you want to read. And here's the white paper. This is open. You can go there. I just logged in. You can go there, or other issues that have this. They should. You want to read that, and this is where we are now. We're at what, 125? It said. Hold on. 126. Okay. So you're at 126 here. You have 9% chance of hitting 2 sigma, 1% chance of 1 sigma. So the downside is very limited now, in terms of what the majors think, the big players think, in terms of their out of the money puts. That means they have covered most of it. Remember, they put it up here. That's what they usually do. When this thing peaks, those puts are in. The out of the money puts or put spreads. Those are in. They've done well. By the time it gets down here, they've done well. So we put ours up right here because I just took my time. I want to see the end. So I was a little more cautious. Don't have the money they have. So, or neither do our clients, so you got to trade with the clients your clients can handle. So that's where we are at that level. So we will cover, go away, let this thing rise and try it again. But not right now. right now we're just gonna hold, see where we are. All our indications are price cycle studies. Third week of March. That should be a decent low. I think probably most of April will be a bounce mode. And then from what I read from others' work, which are better than I am, May could be brutal again. But also seasonality. You sell it May and go away. Excuse me. So that's SQ. TD. Okay, this I posted again on Twitter. It's at Times Analytics. But here, but a little bit back here. These are 30 minutes. As we're going down there, I said this shape is unusual at the values. To me, this is trouble. This is danger ahead. And you can see why. I mean, took all those out, all those highs, and that goes out. We're in new range now. And even the reading is not very high yet. This is +2. Usually around 0, that's the low. Usually about -4, that's the high. Well, we're not in that range. Yeah, the -4, -3, they're way below here, so they would be way up there. And now we're just too deep. But now maybe with backwater. So something else is off. Okay, so it's dangerous. It's dangerous though. It's unknown. You shoot you court martial. You shoot first, court martial later. That's what we're in here. That's what this is telling me. Again, this is 3 months VIX spread, so it's VIX futures. I don't know if it trades Sunday night. Maybe it does. I know early Monday morning trades all the way to late Friday. We take the front month based on volume. So right now we're on March. February is done for sure. We're beginning the March. Within, I think, second week of March, we have to take a look at the expiration of that and move it to April. There will be long April, short July. Right now we're long March, short June. And that's what value is. That's a spread. I do the modification to Sigma channels to take a spread value and plot that. Why? I want to measure it against itself. Again, rather than me artificially deciding what the levels are, let the machine tell you that. And it's unbiased. It's automatic. Takes a look at it, give you a level. So we're at 237. The other one that's very important is SP2. True untested over the years. I've loved this indicator. We have not modified anything other than colors. And so I think version 8 of trade station became available to give us a little color. That's all. The calculation is the same. Has to do with the internals of S&P. Has been a very strong, solid tool for giving us that call. And right now we are in oversold area. 25 and below is oversold, but we could go down. This was, I believe, 8 maybe 764. Yeah. So we can go. I mean, we can go. I think the next 2 days are going to be brutal. I think Friday, not being expiration, you're not going to get pinned like you usually do. GDP could come soft or too strong. Either way, it's going to rally the market. And of course, if I'm hearing from a source out of on the ground, Ukraine, that they think he's going to go in any time, any second now, almost like next few hours. By Friday close, it's going to be a lot lower because now you got live bullets flying around. But we're at 16.9. Okay. And also, when we were not shorting here, but we were telling us when we were not shorting, we were to short here. I took some slack, especially from new members, because they were impatient. And I told them, we don't go by quota. It's event driven. We have to see a pattern. If we don't see it, we don't go. If you like, I can just refund you. And no, I want to stay. I said, then please watch at least one cycle. Look at one cycle what we do. Maybe you like it. And so now I'm getting all kinds of crazy emails, but that's I'll put it in the file for Admiral Tico to review. My dog, I'm not gonna touch it. Last but not least, I'm open for questions. Not here. Okay, hold on. What was my, huh? How did we close that? Sorry about that. Let me go here. I want to show you guys this. Sorry, this is a 3-monitor system. Just went to another monitor. Back. Here's what I want to show you. This one. This is the last one we look at. Let me focus here a little bit better. Yeah, that's 125. All right. Yeah, let's open it up with that. Okay. And let me go click this. Okay. Now, what the hell is this? Immune system. Okay. Thank you. All right. Oh, look where we're going. Is that today's? Yes, that's today's. Yeah. Again, this is another one that is an hour late. At the end of the day, intraday it has no meaning. 200 stocks above 200 moving average, you can get it from a stock chart, and here's a symbol. So, what's important is the separation between these two moving averages, and they're getting wider. That tells me we're probably going to go lower. If we were going to come back up, they would get physically, visually, we'll get closer. They're not. Every time it opens up, there's a continuation, pretty good continuation. We're going to stop, you're going to have a cross. Well, this was a kiss. This is nowhere near a kiss yet. So, and then I know there's a lag there. You realize when it started giving us, we were good up to here. From this point on, it was a bearish divergence. We were going higher, but this indicator was dropping. And then, whoosh, starts to catch up. We're in that phase right now. And we broke 45. Neutral to me over the years. I've looked at it since 2008, 2009. Somebody in Chicago showed me right after I moved there. The market fell apart. This area, 55 to 45, is very crucial. It's kind of neutral. But below that, there's a very good chance you're going to continue a lot lower. So we'll see. Not necessarily in the index value, but in this measure. Okay, that measure. So, doesn't look good. Doesn't look good. I mean, we just have too much fluff. Too much free money, easy money. It's payback time. So, okay. Okay, Treasury yields. The Fed is going to come in and push this baby higher. Every time there's been big numbers, and there's talk of it. As you know, every day we got these talking heads from the Fed, either FRB or the governing board, chit-chatting, making comments, getting on the tube. This is what they're most concerned about, and they're going to push it around. The other ones, they have some impact on because they own it. Yeah, they bought quite a bit of it. And so they're just trying to do a runoff now. That is, don't buy anymore, let it retire and go forward. I don't know if they want to go and sell it, but just basically stop buying it. But here's your 5-year, which is cars, 10-year, that's automobile, this is real estate, and these are long-term obligations, let's say insurance and pension and so forth. And you could see what, toying with the 2-year high, which is pandemic period. If you put 3-year, it gets too squeezed down. So I'm still staying with 2. That can give us a flavor of what happened right before pandemic to now. If you go back, you could see. So I'm surprised actually. This could be flight to quality, by the way. This ease off is quality. Has been going on. I expected much higher. The problem was I wasn't focusing on Ukraine. Once you think about that, you see, okay, there's some large players that are trying to start to go to cash. Market doesn't drop this far, and big boys just sit there and watch TV. They won't be at their jobs. It's like that cost. That cost is coming. There's a 50 costing 200. A bunch of people are going to automatically hit it. Why? They want to be employed next year. They'll be laid off as a money manager. You miss one of those signals. In certain sectors of the money management, I'm not talking about futures or commodity stuff. No managed futures, but I'm talking about stocks and bonds. Well, if that happens on the stocks, you can't sit there. So we'll get some selling there coming in. It accelerates the drop. Hopefully we get to maybe with backlog. With that said, I think I'm good. I think we're at 6 p.m. I'm open to questions. Remember, my area is not real estate. David, I answered the best I could, but that's not necessarily my area. But I just think that from what I see here, I can put SRS in there. So at least know what it is. I have no clue what that is. Is it real estate ETF? Short-term real estate portions. I see. Yeah, yeah. I don't know how efficient that is. Here's the problem, Dave. If I have one share of IBM, I know what that is. I know the balance sheets, I know the management, I know what the products they have. Then deep in the balance sheet, I do a deep dive and I know what one share is worth by a number of measures, right? What's a one share of the real estate? No two, the underlying is no two property are the same. So I don't know what this means or how realistic that is, but it's a vehicle we will trade in. It's just it's like double or triple ETFs. It never work. I don't know. Just what I'm not saying this doesn't, but I'm no familiar with this. It's at 16. Obviously, way back there was a lot higher before this. So let's see what this is. Yeah, it was much higher. Now it's flatlined, if you will. But yeah, I'm not surprised, sir. It makes sense. We'll probably go higher, much higher. Yeah. I think down here in Florida, especially this neighborhood, which is the fourth highest net worth county in the U.S., fourth highest. If you drive a Jag, you're nobody. Maybe they'll take a look at you if it's a very, very expensive Benz, but either you want to be driving a Lambo or what do you call it, Bentley. They're saying 2 years from now. Why? Very, very expensive prices right now. That it's going to get that fluff out. It's going to take time. But I can see already some of the brokers are complaining because they don't have that go days they had a couple of years ago. Things are beginning to slow down. Of course, the rates are going to dictate that. Okay, what else I have? Oh, one more chart for you. I'm sorry, while we're recording. Lowry's. Okay, we have been putting these on. Let me turn that off. That's our take a strike that is good for telling us what is activity a lot, like buy or sell. What is gold is ticking and ES and NQ. Oh, because market open. Market open. And where are we upticking a little bit? Yeah, we're upticking at that. Yeah, it's short lived. Look at last night. We were up 42 handles around 2:30 in the morning. I usually check right before London what's going on. And I took Tico out for a walk and back in. I watched the open. We were up 42 handles. What did we close that? Negative 80? Yeah. That's 120 points move. That's 1,200 on the Dow. Then it says 35 years in real estate never sell the stock market before on chart 30. Listen, part of it is COVID. And for us, especially for us in Naples, that was rushed down here for that. So maybe it stayed a little bit stronger here, okay? But just the fluff is too much. This PPP money just too much, and it'll get to trouble. I know I've got guys with developers, okay? Good friends. They discuss. I don't pry. And they don't like to talk to our market because they know market is two ways, and theirs is not. They can, but they're developing 200, 300 unit apartment buildings. But now you can see a little bit of stress in their voices. Yeah. For example, what would be there a long-term takeout loan that will pay the builder? Yeah. Pay the profits so the property has a stable mortgage, long term, and the rental will pay that. The ones who building or flipping houses, that's not a problem. A friend of mine just sold a house in Mediterranean, multi-million, very nice house, nothing fancy, just that's what the prices are. And it's right at when the stream turns, becomes a lake, so views majestic, and you see the sunset. Beautiful area. There's nothing in front of you. Mediterranean is very large. It's a very large project. Very nice. Very quiet. Those are getting financing for the sale and going through. But the ones who are panicking are the ones that are not ready. They won't be finished, and they're wondering what the rates are going to be and so forth. And that's we always have this part of cycle. I remember that in 2005, 2006 in north of Sunset in LA. So Beverly Hills, Sunset Plaza, that area. 2005, 2006, still go, but you could see there were some problems. You could see some noise about countrywide, that sort of thing. And those who managed to finish and get out, walk proudly. Those who got stuck, actually, then it was a tailspin into 2008. But I'm not saying this is those days. We have Dodd-Frank now. Things are a little bit different on the paper. It's just that you can't get much loans. The fluff you had there was much more, in my opinion. So, anyhow, Larry, Brian's up and down volume. This is basically a very simple ratio. We keep on getting this question on the Twitter. What is it? It's very simple. Up divided by up plus down volume, or down divided by up plus down volume. So if you're down here, one calculation, up there another. And you just have a logic that switches over, depending on what that value is. Very easy for a machine to do. And we plot it by either 60 minutes or 30 minutes. So we could see intraday where we're heading. And if you have a swing intraday back, you could see what that value is. It records it. It's been crazy. It's been incredible. Since I've been putting these charts up, with the help of also Bo and Walter Diemer, which most of you guys probably know, there's a whole stream of discussion throughout the day. I mean, I get behind. I want to get a chance to read it myself. My job is I just put the charts up every couple of days. There's a link we have that we send out to people, which is on, we actually download it, and it's, where is it? Hold on. I think we have it somewhere in here. Let me see if I can find it on my docs, and then I'll open it for you. Documents. It's by Paul Desmond, obviously. ELD, no. Hold on. Did we download that somewhere? I think we did. No. Dude, what happened to it? 1 second. No. Okay, let me download it here locally, because we put it on a server for distribution. Give me a second. Let me go there. And who knows how many times it's been downloaded? Yeah, people liked it. Okay, there we go. Let me download this, and it's going to say where. Put it to me in documents. There we go. And then I'm going to open that for you. So you know what I'm talking about. It's the work that Paul Desmond did when he was at Larry. He's passed away when he was at Larry's research group. What a nice guy. I've met him a couple of times in LA. There we go. Are they find better markets? This one. This must be. It goes back. I mean, I've known him like in '98 up to 2005. Last time I talked to him. And he used to come to LA. And then, of course, 2009, I went to Chicago. But if you take this, and it's a little bit large, it's 17 pages. Print it out, then you can walk through these ratios. You could get a sense. Now, some of the old folks, they go to daily and look at it this way. And they're counting how, that's what I do too, how it hits the 90 level, negative or 90 positive. Remember, that's 80. That's the 90 part. You got to hit the 90 area. Now, sometimes you get double 80s. That's a different interpretation. I suggest you go and read that. I'm a new practitioner there. As Feynman said, the guy who did the thermonuclear devices at the Manhattan Project. If you want to learn something, go teach it. I'm in that phase. I'm still trying to learn that. But get the documentation, print it out, and you could see day by day what's happening. Bo is very good. Bo Norseman 1 or Walter Diemer. So you can see it on my tweets. Go to my tweets, you won't miss it. Dennis and David, I'm saying. I think it was is drying up with the rising rates, correct? And there's they're here in Germany. Bundesbank is estimating. Huh? What? Okay. There's a Bundesbank in Germany is saying 30 to 40% price premium on the condos. Remember, the real estate market has been in a boom, just like the stock market since 2009, 2010, right? 12 years, 13 years. Oh, yeah. Sure. Yeah, if it pulls back, it's going to be strong. For downside, I agree. Problem we have right now is that you can't lie on the loans, and affordability is difficult with the Dodd-Frank. So, at every level. That's why you also see a lot of these cash mortgages coming in saying, hey, call us, don't go through the bank. The shadow banking. The fact that they're strong says a lot of people are not qualifying with traditional loans. You know, I mean, I have a friend of mine, I won't mention any names, but, you know, I have many actually. I don't think the paperwork is correct. But it's just that, in order to lock in what they wanted, they put things down and somebody approved it and now they're in. In old days. Now, who knows how they get refinanced? Yeah. Stop. Right now, you don't want to be renting is not cheap either, it's expensive. But right now, it's a seller's market, not a buying market. I would wait a couple of years. Yeah. And I'm not against that. Just get something you like, you can afford, put it in LLC, pay it off cash, no payment. And put it in LLC and put it aside so you're protected. Yeah. Remember, trading says you cannot have a big LTV, 50% maximum. Your cars, everything is going to be paid for. Those you cannot have any loan. Why? If you can't afford to pay cash, it's not for you. Why? Because when you're trading, it's going to be back on your money. Make sure you're debt free. One loan is allowed. Your home. LTV, 50%. Okay, guys, I'm wrapping up here. Any questions for me? Anything else? Again, these are being recorded. As always, they'll be posted. Same location. Go to homepage. Our videos. This is the footers. Okay, there's our blog. I haven't done much in the blog. Go to videos. You post it and you go. We have to work on FAQs. A lot of things have changed. We will. But first, I got to fix the PMT. Just all it is some archiving of my emails to Time and Digest. Time and Digest has not come back. You click here, it goes to a dead spot. They haven't even kept up their website. It's sad. Yeah, this is BS. But this is what it is. They had data problems a year and a half ago. They told us that. By December of 2020, we knew they were in trouble of how they're going to do with the data. Remember, we have 120, 100 for S&Ps, another 30, 40 people in gold and bond. That's a lot of tracking every time. We can send an order in of long, short, or flat any time. You got to keep track of it on the computer. And then let the machine crunch and say what ranking is. The last one we should have had was the year-end report of the 2020, which turned out to be year-end also for that. Since then, yeah, they answer my emails, but they're not running any ranking. And I'm kind of upset because I'm a competitive guy. You know, I'm in sports and all that. I like the competition. It drives you more. Right now, I'm in a vacuum, but I'm going to do what they learned over the last 15 years that I was with them, and help us guide through pre-treacherous markets. And we're going to do that. Now, one more caveat. If you decide to join PMT for a trade, we don't discuss trades here. Trades go on the website. But if you want to go there, you have to realize we're event-driven. We're not quota. Yeah, this actually will be changed dramatically, this write-up. Oh, I think we've cleaned up a little bit, yeah. But we got to clean up a lot more. That we're not going to send on a Wednesday or a Friday or one trade. No. Especially now, as we enter, for example, this period. When we're dropping like a rock, I stopped giving any option trades. Do you know why? Volatility. Volatility was so high that even if you're right on that direction, you would blink and it would eat away your premium. So we don't do that. If we get into a tough downward action, we give you targets, we give you direction. Forget the option trade. It's not going to be easy. We prefer actually to trade futures, either for yourself or through us or whatever. But just because the vol is so high, remember, the vol is the second most important input into Black-Scholes model. When the vol gets that high, minor moves, the roll, the rate of change of price to the change of volatility, it would be a suicide. So we wait for it to calm down, get back into options. But till then, we give you direction. I mean, we get very good direction here. Based on the S&Ps, we're trading, we're in. But we would translate from Dow, and we said 21.8 low, and then 18,000 low. Both we nailed it. Of course, 18 was a big one. And then we were lucky on the time. There's a video. I was reluctant even in saying that, but March 20th always comes to mind. So is September 20th, which is the fall equinox, end of summer, beginning of autumn. Those have not failed us. They're not 100% correct, but plus or minus 1 day, maybe 2 days tops. So I believe, to recap here, this market will rotate between Friday the 18th, okay, to Tuesday 22nd of March. For tradable bounce, let's see where it takes us. If we get into trouble, then we cascade down on that. Going to be a big one. Would I get long between? Yes. Would I take the other one and go short? Absolutely. But if I'm a day or two off, I don't care. I'm going to get the trend right. I'm not looking for a top tick. I want to get the trend right. Getting a top tick and having the trend wrong is very dangerous in terms of feedback. It's going to, okay, payback. It's going to dice you up. Any other questions for me? Remember, these repeat every Wednesdays. We've got such that we're scheduling all these for Wednesday. Now, again, for tomorrow. Those of you interested in systems, you see it on Twitter, and you go there through our website again. There's a button here for Twitter. There's my Twitter. And we'll post the items like this, like a webinar for tomorrow there. And that's for the NQ people who trade NQs. Okay? And if you have not used the trial in the last 6 months, we're more than happy to give you about 2 to 3 weeks of it. You could see it. It does not trade on Wednesdays. Like it doesn't trade today by design, but it would trade 4 times a week. Last week we just rolled out the 403. Again, we had problems getting it started right. It was my fault. Just long hours. A little mistake in the morning. And once you start, once the first trade goes out, you cannot reset. Because you got to monitor that. Okay? Remember, it's got to monitor it. So we missed that. So, but this week, bang, bang, is done almost $4,000 each day, net, $4,000 out of 14,000. So it's on every 12,000. $4,000 under 12,000. Get margins that drop down. Yeah, margins were high before. 4 divided by 2, so it's about 30% each day. At one point yesterday, position high was 7,200. And I begged everybody. So did what do you call it? Peter Cook saying, get out. I was shouting, eject. And some people did. We're reporting what the system did, which is how orderly system closed. As a matter of fact, I may have a chart or two here. Hold on. I'm proud of it. I'm really, this is the best work we have ever done, ever. Not easy. 20 years of my life. But this is the best work, bar none. Here is one of them, 98. No, that was it. There we go. There you go. Yeah. Hold on, no, I'm thinking either. No, this is the one. Yes. This is the test. This is the test of the 403. 3 different distinct exits. One is the first order, first level, second level, and then that type of stuff. We don't trade past 12:15. Took it out. That was 12:15. And this was at 12:44. Yeah. Yeah, this was also too long. We got one out there. So you have 2 long and took the bounce out there. Boom, boom. Not too shabby. Remember, it's opening after that we dropped dramatic. Dramatic. But it made, by also taking this first trade, it puts a B positive break even. So we cannot lose on the second one. That means you're going to go early in the day. You know you're going to have a positive day. It's important to have positive days. Nobody can withstand going 4 or 5 days of negative. You're going to say have the stomach, you're going to say it, but not in reality. It doesn't work like that. So, all right. My pleasure, sir. Thank you, Dennis. Any other questions for me? As I'm getting ready to shut down here. Again, think about what's beyond here. Notice, we're not oversold yet. And weekend is coming. And all events say that is most likely it's going to move, including one confirmation I had from a friend that has got a contractor out there, a defense contractor, saying that they're about to move. But officially, they're talking about Friday afternoon our time. So we may see a little bit of fireworks in the last hour of Friday. Thank God it's not expiration. Weeklies have, but not overall expiration. But I think Monday or Sunday night, 6 p.m., fireworks. So, wonderful. How are you, sir? Glad to have you back. Colette, you're quite welcome. I'm shutting it down now, guys, because I gotta get this to post-processing and then we can post it. Good night now. See you next Wednesday.